All right, so today we're really diving deep into this whole idea of risk management and trading.
Okay, sounds good.
Got some really interesting stuff you sent over. It really highlights how important it is.
Right.
I mean, one part even says, flat out, risk management is the key that unlocks trading success. That's a pretty bold statement, don't you think?
It is, yeah.
So let's unpack that a bit.
Yeah.
Why is risk management so crucial in trading?
Well, markets, they're inherently unpredictable, right?
Right.
Every trade you make, there's always the potential for making money, of course.
Yeah.
But also losing it.
Of course, yeah.
And that's where managing risk really comes into play. It's not about trying to eliminate risk completely.
Right, because you can't.
You can't. It's impossible. It's more about understanding it,
Okay.
mitigating it, and ultimately controlling how much you could potentially lose.
So it's not just about picking the right stocks,
Right.
or timing the market perfectly. It's about having that plan in place.
Exactly.
Like what happens if things don't go your way?
Exactly.
Like a safety net for your investments, kind of.
Exactly. You got it. It's like a safety net. And building that safety net, well, it involves different strategies, right?
Yeah.
You got to tailor them to your risk tolerance, your goals, and even what you're actually trading, the specific assets.
Yeah.
Now, I noticed in your notes here, you mentioned options trading, right?
Yeah, options, yeah.
Options, they're leveraged, right? So you really got to have a sharp focus on managing risk there.
That's right. Options were definitely something I was particularly interested in. And I remember reading about something called stop-loss orders.
Yeah, stop-loss orders.
As a way to manage risk. So can you kind of break that down for me?
Sure.
How would they work, especially with options?
Yeah, so stop-loss orders, they're a key part of risk management. It's think of it as a safety valve. It automatically sells your position if the price drops to a certain level that you set beforehand.
Okay.
With options, which can be pretty volatile, they can swing up and down pretty quickly. Stop-loss orders, they can be super helpful in making sure you don't lose too much.
That makes sense. But wouldn't it be kind of tricky to set those stop-loss points with options specifically? Because, they're options, right? Their value can fluctuate so much.
Yeah, that's a really good point. And it really shows why it's so important to get the ins and outs of different types of stop-loss orders, right?
Okay.
You've got trailing stops. They adjust, as the price moves up, hopefully in your favor. So you might be able to lock in more profits.
Interesting.
And then you've got guaranteed stops.
Okay.
Which they protect you completely from slippage, but they usually cost a bit more.
So choosing which one to use, that depends on what you're doing, right?
It really does, yeah. Your strategy, the option you're trading, it all factors in.
So it's not just a one-size-fits-all kind of thing.
Not at all. And speaking of tailoring things to your needs, you also mentioned diversifying your portfolio, right?
Yeah, diversification.
Diversifying, that's a huge part of managing risk.
Okay.
You're spreading your money across different types of assets, right?
Right.
The idea is if one investment goes south, the others can kind of soften the blow.
Don't put all your eggs in one basket, right?
Exactly. That's the classic advice. But how do you know what the right mix of assets is for you?
Yeah. How do you figure that out?
That's where understanding your risk tolerance comes in.
Okay.
And your financial goals, right?
Right.
If you're someone who doesn't like taking a lot of risk, you might want more of your portfolio in things that aren't so volatile, like bonds.
Okay.
But if you're comfortable with more risk and you're looking for bigger returns, well, then you might have more in stocks, maybe even options.
So it seems like a lot of this just boils down to self-awareness, right?
It does.
Like knowing how much risk you're comfortable with and not letting emotions like fear and greed, mess with your decisions.
You nailed it. That's a critical part of it all. See, managing risk, it's not just about stop-loss orders and asset allocation.
Right.
It's about understanding the psychology of trading.
Yes, psychology.
Recognizing those moments when you might be selling too early because you're scared.
Yeah.
Or holding on to a losing position for too long because you're greedy.
Right.
The best traders out there, they stay calm, they stick to their risk management plan, even when the market's doing crazy stuff.
So it's like having your own set of rules, right?
Yeah.
Almost like a trading constitution or something to help you navigate all the ups and downs without letting your emotions get the best of you.
I like that. A trading constitution, that's a great way to put it. It's about having that framework.
Right.
So you can make rational decisions, based on your risk parameters, the ones you set for yourself.
This has been Wow, really eye-opening. I mean, it's clear that risk management is so much more than just like a footnote in trading.
It really is.
It's like the foundation for making good decisions
Absolutely.
and hopefully, achieving success.
Exactly. And that brings us to, well, a final question for you to think about.
Okay.
If risk management is the key, right?
Mm-hmm.
What specific doors does it open for you on your own path to success in trading? What kind of research, what kind of self-reflection would help you find those answers?
That is a great question. I think I have some homework to do.
I think we all do.
Thanks for all this insight. It's been a pleasure.
It's been great talking to you.